At first glance, Marvell Technology's latest financial report looks like a classic comeback story. But when you dig a little deeper, you see what's really going on. It's not just a comeback. It's a massive, high-stakes bets on the future of AI, and it's all happening right now.
Okay, just look at these numbers. It's kind of nuts. Q3 last year, they were in the red, down over $676 million. This year, a profit of $1.9 billion. That's a swing of more than $2.5 billion. I mean, a number that big, it just makes you stop and ask,
what just happened here? Did they suddenly drop some revolutionary chip that the whole world just had to have? Or was this, some kind of creative accounting? Well, the answer, that's the key to unlocking Marvell's entire game plan for the future.
All right, so let's peel back the layers and see where that cash actually came from. Because this wasn't some story of them just being geniuses for one quarter. Nope, this was a story about strategic subtraction.
Yeah, you heard that right. This huge pile of cash didn't come from selling more chips. It was a one-off deal. Marvell literally sold an entire division of their company.
So back on August 14, 2025, Marvell finalized the sale of its automotive Ethernet business. And for that, they got a cool $2.5 billion in cash. I mean, that's a huge number, right? But believe it or not, that's not even the final number that juiced their profit line.
And here's how it hit the bottom line. See, after you account for the value of the assets they sold, Marvell recorded a pre-tax gain of $1.8 billion. That is the number. That's what turned what might have been a loss into this jaw-dropping profit.
Okay, so we figured out the giant profit spike. Mystery solved, right? Well, not exactly, because this just leads to an even bigger question. If you take away this one-time sale, is Marvell actually a healthy, growing company? Or was this just a move to get some quick cash?
And this, my friends, is where the real story starts. We've got to look past that big sale and dive into the guts of Marvell's actual business. See, selling off that automotive division wasn't some random decision made over a weekend. No way. This was a totally calculated move to dump an asset that wasn't core to their mission, so they could double down on what really makes them money.
I mean, just look at this chart. The dominance of one area here is, well, it's staggering. A whopping 73% of Marvell's revenue comes from a single market, the data center. Now think about that automotive business they just sold. It was only 2% of their revenue. It's like they cut off a tiny twig to pour a whole bucket of water on the roots of the tree. And it gets better. That data center business isn't just huge, it's growing like crazy. We're talking 38% year-over-year growth. That is seriously impressive, especially for part of the business that's already 3/4 of your income. So what's the rocket fuel here? Well, the company spells it out for us.
And there it is, the magic acronym AI. Marvell is surfing this massive wave of investment in artificial intelligence. So let's recap. They've got this enormous AI-fueled growth engine, and they're sitting on a fresh pile of cash. The big question is, what's the next move?
Simple. They reinvest it. They take all that money from selling off an old part of the business, and they make a gigantic bet on the future of their main business.
So just a couple of months after that cash hit their bank account, Marvell announced they were going shopping. And they weren't looking for a bargain. They were hunting for a company on the absolute bleeding edge of AI hardware. And let me tell you, this is no small purchase. We're talking a deal worth up to $5.5 billion. Think about that. That's more than double the cash they just got from selling the auto division. This just screams commitment to their new strategy.
So what did they buy for all that money? A company called Celestial AI. And they build this incredible thing called a photonic fabric. Now, let me break that down. As AI models get crazier and more powerful, you need tons of chips all talking to each other. But connecting them with old-school electricity is like shoving LA rush hour traffic through a one-lane tunnel. It's a huge bottleneck. Celestial's tech, it uses light to move data. It basically builds a superhighway between the chips, blowing that bottleneck wide open.
And that's why this whole deal makes so much sense. Marvell isn't just buying a cool tech company, they're buying the key that unlocks the next level for their biggest customers in their biggest and fastest growing market. It's a perfect fit.
So when we step back and look at the whole picture, that shocking profit number wasn't just some weird thing that happened one quarter. No, it was a crucial piece of a much, much bigger puzzle, a deliberate transformation of the entire company.
Really, it all boils down to this simple three-step playbook. First, divest. Sell off a smaller, non-essential piece of the business to get cash and get rid of distractions. Second, Focus. You double down on your absolute core strength. For Marvell, that's data centers and AI. And finally, step 3, reinvest. You take that money and you make a huge, bold move to lock in your dominance for the next decade.
What we're witnessing here is a company totally reshaping itself right before our eyes. It's shifting from being just another semiconductor company with its fingers in lots of pies to becoming a laser-focused leader in data infrastructure. And they are betting the entire farm on the AI explosion continuing. So, the strategy is crystal clear. The moves are incredibly bold, and the stakes, they honestly could not be higher. Marvell is all in on AI. The only question left is, will this be remembered as a masterstroke, a visionary move, or will it become a cautionary tale about betting too big, too fast? I guess we'll have to wait and see.